Did you know non-profit organizations can face tax penalties or even lose their tax-exempt status if they don't follow the right rules? While it's true that non-profit organizations are granted various tax exemptions under the relevant tax law, they come with specific conditions that must be met. In this video, we will explain the critical tax rules every non-profit organization needs to know, from exemptions on donations and grants to taxable activities like renting out properties or running side businesses. So watch till the end.
Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of TaxMobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos.
What are non-profit organizations? Non-profit organizations are entities established to help people rather than generate profits. They focus on fostering public good such as promoting religion, education, healthcare, charity, environmental sustainability, or other social causes. In Nigeria, example includes mosques, churches, faith-based schools, charitable foundations, NGOs, and community-based organizations. Every naira they earn is reinvested back into their mission, not shared among members or stakeholders. As such, non-profit organizations enjoy significant tax exemptions under Nigerian tax law. But still, even non-profit organizations have tax rules to follow, especially if they step outside their mission, like renting out buildings or selling goods. The tax treatment of non-profit organizations depends on the nature of their activities, sources of income, and how the income is applied. Now, let's break down the key tax rules non-profit organizations need to follow. Tax exemptions for non-profit organizations. Under Section 23, subsection 1C of the Companies Income Tax Act, non-profit organizations will not pay companies income tax on their income if it fulfills two conditions. 1. If it is used solely for their charitable mission, such as funding education, religious work, or healthcare initiatives. 2. If it is not derived from unrelated or profit-oriented business activities. However, when non-profit organization engages in activities not related to its stated objectives, such as running a business or leasing properties, the income from these activities are taxable. For example, a foundation receiving donations to provide free healthcare will be exempt from companies' income tax. Whereas if the same foundation starts renting out office space for commercial purposes, it must pay companies income tax on the rental income. Value added tax. Whether non-profit organizations will be exempted from VAT obligations depends on the nature of the transactions. Donations, gifts, and grants received by non-profit organizations are not subject to VAT. But if your non-profit organization starts selling goods or services, VAT might kick in at the usual rate of 7.5% unless it is directly tied to your charitable purpose or VAT exempt. For example, if an educational non-profit organization collects tuition, it will be tax exempt. But a church selling taxable goods or services outside religious activities to the public must charge VAT on the sales. Withholding tax. Non-profit organizations have obligations to 1. Deduct and remit withholding tax when making payments to contractors or service providers. 2. Pay withholding tax on investment income such as rent, dividends, or interest. Failure to comply with withholding tax obligations could attract penalties from the relevant tax authorities. For example, if an NGO hires a caterer for an event, it must deduct withholding tax before paying the contractor. Personal income tax for employees. Employees of non-profit organizations are subject to personal income tax under the Personal Income Tax Act. Non-profit organizations are required to deduct and remit pay-as-you-earn tax on their employees' salaries and benefits. For example, an orphanage hiring staff to manage its operations must ensure payee taxes are remitted to the relevant tax authority. Stamp duties. Stamp duties are taxes levied on legal documents and transactions, typically involving the transfer of property, rights, or agreements. They are imposed by government to certify the legality of certain documents and provide public revenue. Documents executed by non-profit organizations, such as lease agreements or contracts, may attract stamp duties unless specifically exempted. For example, a charitable organization signing a lease agreement for a commercial property must pay stamp duty on the lease agreement. Tax obligation for business activities. Where a non-profit organization engages in business or commercial ventures, the income generated is subject to tax. This applies to activities like leasing event halls or running a consultancy service that isn't directly tied to their non-profit goals. For example, a non-profit organization operating a guest house for revenue generation must pay companies income tax and VAT on the income derived. Filing obligations. Non-profit organizations are required to file annual tax return under Section 55 of Companies Income Tax Act, even when tax exempt. The filing must include audited financial statements and evidence that income has been applied exclusively for charitable purposes. Failure to file returns may result in penalties, reputational damage, and scrutiny from the Federal Inland Revenue Service. FIRS oversight. The FIRS actively monitors non-profit organizations to prevent abuse of tax exemptions, to ensure compliance with stated objectives, detect unrelated profit-making activities. Tax-exempt status may be revoked if the non-profit organization is found engaging in substantial unrelated business activities without reinvesting the proceeds into its charitable objectives. Tax incentives for donations. Under Section 25 of Company Income Tax Act, those who donate to approved non-profit organizations may qualify for tax deductions. This incentive encourages contributions to fund institutions or organizations recognized by the Federal Inland Revenue Service. For example, a corporation donating to a foundation focused on combating malaria in rural communities can claim tax deduction for the donation. Key consideration: to stay compliant, non-profit organizations must keep detailed financial records, separate income from charitable and unrelated activities, get regular audits and professional tax advice. Now, let's consider 5 practical case studies to make things clearer. Church operating a logistics company. Imagine a church that receives donations to fund its activities but also run a logistics business by the side. While the donations are tax-free, the income from the logistics business is subject to company's income tax and value-added tax because it constitutes unrelated business activity. NGO leasing office space. Consider an NGO focused on free legal aid leases out part of its building to a commercial firm. The rental income is subject to CIT and VAT. Educational foundation hosting paid seminars. A foundation providing free education organizes a paid seminar unrelated to its educational objectives. The income from the seminar is taxable while tuition fees for free education remain exempt. Charitable organization running a consultancy firm. A charity organization established to provide healthcare services offers consultancy services to companies for a fee. The consultancy income is taxable because it is unrelated to the core charitable purpose. Faith-based organization renting event hall. For a mosque that rents out its event hall for weddings and parties, this income from all rentals is taxable and may attract VAT. In conclusion, while non-profit organizations in Nigeria enjoy significant tax exemptions, they must navigate complex tax regulations for activities outside their core charitable purpose. Proper record keeping, strict adherence to filing obligations, and separation of income sources are critical to maintaining tax-exempt status. As such, seeking professional tax advice is essential to ensure compliance and avoid penalties or revocation of tax privileges. Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.